This is Christian from Trade Group, and this is your end of day market recap for Monday, December 29th. Very quiet day. This just feels like we're kind of like sustained holiday type trading. There's not a lot of analyst notes out there, upgrades, downgrades. The price action is just very kind of sleepy. There are a couple bright spots out there. Last week, the big thing was kind of just, I don't want to say the peak of the metals trade, but maybe, short-term top. Everybody really getting excited after the metals already made a huge run. Uh, I think those are always situations that you can kind of pick up on. I think, in the first 15 minutes of CNBC's Fast Money, they talked about gold and silver. That's a surefire indicator that the whatever they're talking about has reached like probably the heightened amount of attention that it's going to get. So I'll review a couple of those charts because, again, very slow day. Price action continues to be not great. Friday, which I did not do an end of day video, but I don't think I needed to do one because there was very little price action in the indices, and just more things going down than up. So another day of that, you could see more things going down on your screen than going up. Risk disclaimer in front of you. Please go ahead and read that. What did do well today? Um, Energy did well today. XOP Energy and Gas. That just kind of continues to go back and forth. We might have a breakout finally in Exxon. Again, I kind of just, I did put on an Exxon trade today because I hate when I look at something and say, oh, that does look like a breakout. And I kind of just stare at it and I don't do anything, and then it ends up working. It's kind of like one of those situations that you come upon a lot where you kind of look at something and you say, I don't need to take, I'm going to pass on that one. And then it ends up working really well. So I decided to put on a trade there, just kind of like, because uh, I'd rather be in the trade and get stopped out for a dollar lower than watch the thing go up without me, which is kind of really odd, a really odd thing to say, but it is what it is. So a couple of things that I think are pressing, and why you're seeing this price action that's not so great. Um, Again, I go to positioning. If you go back to what we experienced in November, which was not good price action for 3 out of 4 weeks. The only week that was good in November was the very last week, holiday shortened week, low volume. That's where we rallied back. There was that Fed pivot where originally they said that there was no guarantee that they were going to cut interest rates in December. They ended up that ended up switching. Fed Williams came out and said that they're going to that they now think that they can cut interest rates, and the market rallied pretty nicely off that. So do I think with the positioning at it with what it is right now, where we're seeing very large, the highest on record margin balances, the lowest cash on balance in terms of what the fund manager survey said from Bank of America. All of the analysts right now are putting in bullish uh, predictions for 2026. Do I think that we need something else? Stimulus. I do. So that leads me to the next picture here, which I'm going to show or um, screenshot, which is what we have for Fed Fund futures. Now, we have Fed minutes tomorrow that are going to come out, but this is the odds of, or the probability of a rate cut. Hope that you could see that. Uh, so the number that I'm looking at, this one, notice what this has been doing. This morning it was 19%. It keeps going down. The probability of a rate cut happening on January 28th, so basically a month from now, is 16%. That has really moved down. If you go back to like where it was um, back on the 19th, so basically about 10 days ago, there was a 22% chance. If we go a little further back, I forget when the Fed meeting was. When was the Fed meeting? Regardless, like if you go back to the 15th of the month, right? It was a 24% chance that they were going to cut interest rates in January. So, you're looking at this price action that we're getting right now. And let me just go back to today's date. So 24% chance this has been sliding. So you may say to yourself, well, they're going to be cutting interest rates, right? We're going to get a new Fed governor that's going to be coming in, probably one of the Kevins, and they're going to cut interest rates. Okay, I agree with that, but that's not going to come till what, June of next year. So I would be very mindful about this price action right here. Again, I'm not trying. I for whatever reason, I feel like I sound like a bear recently. Probably since November, when I started to see just how high the margin balances were and how low cash balances. It's a for me, it's a question of positioning. Um, the market really likes to rally when folks are kind of doubting things. So I've been calling this the all-in market. So yes, I think that you're going to need the Fed's help here. So I don't particularly. So I think this is why you're seeing IWM not act great. IWM likes to have rate cuts, less rate cuts happening, or the probability of less rate cuts, and you're going to get more troublesome price action. So let's go to the charts, right? Because again, maybe I'm being over dramatic here. We did make a new S&P new high like a couple days ago, which was in here. But here's where we are. And, again, it just doesn't seem like it's very strong price action. I get it. Like maybe we can incrementally move up here. Maybe tomorrow, maybe turn around Tuesday tomorrow, after today, and that may be so if we happen to bounce tomorrow and have a turnaround Tuesday, you might want to be selling into it. Another thing that comes up, so I'm going to just kind of go back and forth with concepts. Here's the Qs, by the way. They did back test this top of the value area. So if you're looking for a level to say, hey, I can go long versus a level in the Qs, I would watch this. What happened here? I don't know what happened to my screenshot. Let me just go back here a few. That's a pain in the neck. So let me bring in. I guess you're just not going to see it. I apologize. I'm having a system issue here, but we're inside value. But remember this level again. Normally I can show this on the same screen, but this 619 level, that's the level to really pay attention to. That is right here. That's where we're kind of finding some support. If we do break that, and we're not talking about a big distance, the next support down is about a 0.5%. So that's what I would be watching for the Qs. But again, if we have some type of a turnaround Tuesday, probably want to be selling into that. Something else that I find very interesting is this. Um, this is the second. So it's been now 2 years where what they call the so-called Santa Claus rally, which is the last 5 trading days of the year and the first 2 trading days of the new year. Notice what happened in 2024, and I think I showed this last week. I don't know why I can't uh, expand on this, but notice basically what we had in 2024 is a rally on the 20th, the 21st, the 23rd, and the 24th. So that kind of me that it was like a front run of the Santa Claus rally. Thereafter, the market sold off, and the exact Santa Claus rally, because we sold off on 12:30, we sold off on 12:31, and we sold off on January 2nd. We rallied on the 3rd. But you know, if you look at what's transpired so far this year, we rallied on the 19th, which was quadruple witch or triple witching. We rallied again on the 22nd. And then, we moved up fractionally the 23rd and the 24th. Since then, we've been coming down. So I kind of think that the market, when everybody talks about this, remember, like going back 5 years ago, I don't think people talked about the Santa Claus rally as much. I think just the last couple of years, people have been really focused on the Santa Claus rally. So what happens? People front run it, like anything else. So I think that's why you're not seeing it, or why you may not see that so-called Santa Claus rally, is because it gets front run, right? The more when people talk about something, the more it gets front run. I mentioned earlier in the video that the S&P targets for next year. So again, this is what happened in the end of last year too. Everybody, the purple line in here, and again, I apologize. I know it's difficult to see this. See if I can, but everybody was raising their price target rate at the end of the year and into the beginning of this in the beginning of January of last year. Right. So this is what's happened again. Everybody's bullish. So again, it makes me concerned. I talked a little bit more about that in the weekend video, but it makes me concerned. So does it mean that the whole next year is going to be bad? No, but I think that we could have some troubles in unless we see some type of under positioning and the data supports that. But I just think right now this is the all in equity market rally, and we're probably going to need some type of a dip to shake things up. And then you can kind of think about, once we get to the halfway point of 2026, when they start cutting interest rates again, then you might really have a nice rally once positioning kind of gets moved down. So that's my view right now. I changed things. I changed my view as with the market, but I'm thinking tomorrow, if we rally a little bit or have a turnaround Tuesday, you might want to be selling into that. For now, the price action is, even though it's not great price action, we're not really breaking any support. Here's what Qs look like. Here's what IWM looks like. Again, it's been moving down more. It's You got to remember, IWM is really tends to move based on Fed expectations. So the lesser probability of a rate cut happening in January, the more IWM tends to move a bit lower. So the first time this has been underneath the 20-day moving average since the end of November. All right, so there's a little bit of a change there in IWM. It's kind of been mulling around here a little bit, but there you go. Bright spots. Well, so let's talk about the metals and what happened with the metals. So I did not sell my GLD position, my trading account on Friday. Congratulations if you held it all the way through. I think I sold it on Thursday, and I got 410. So again, I didn't get the tippy top, and I said I will add back on a pullback. So GLD down 4% today into the 20-day moving average. That's where I essentially I put a starter position back on, and let's see what happens here at this. For now, it's holding this VPOC, right, which is where a lot of buyers and sellers have previously met up, and we haven't revisited. So we're down in here. So that's what I did for gold today. Again, I'm just trying to follow what I said I was going to do, which was re-add gold on a dip. Silver sitting down here. There was some positioning in SIL today on the call side, right? But again, I saw this, like, everybody talking about silver, and I get it. It's made a big move, but again, you got to know when to kind of take some profits. Take some off the table. Just to move back into the 5-period moving average today, even though down 7%, just shows how quickly this moved. And I think that this needs some consolidation, maybe the 20-day moving average to kind of catch up a little bit. Here's SIL, which was down 5% today. Like I said, look at the volume today, by the way, in the silver miners ETF. So again, this may be a little bit of a buy the dip opportunity. Did come in and fill this gap, right? But that's kind of the most interesting thing. A couple other things that I'm watching today. Micron continues to act really well. Look at what Micron did today. It was up in a tough tape. Micron was up 3.3%. Will these memory chip names reset or have a correction? Probably at some point in 2026, but I'm not going to guess when that is. For now, you can day trade these things to your heart's content. Sandisk still remains inside value. It tried a couple times there at the end of last week to break back out, and I think there's just too many sellers in this stuff right now. Not in Micron, but these other things are kind of stalling. Western Digital was down 1% today. So again, they're not breaking, like, this isn't breaking down. It's just seeing some selling into strength, which again I think is quite normal. A couple of things that I was focused on today, it didn't really materialize that well. I was looking at some of the discount names. discount retailers. Um, Dollar General didn't go anywhere. I'll be watching Walmart tomorrow for this to turn back up. It actually did turn here a little bit. So again, I'm kind of thinking more cheaper stocks, even though Walmart is not a cheaper stock, but more things that you know cater to the like discount buying. What was another name that I was looking at today was AEO, right? The casual theme where everybody's in sweats now. Right? There's always a reason for some of these things that you can come up with a reason, some reasoning for. But that's why I think AEO and some of the other specialty retailers have gone up. Right? If you look at like Gap, for instance, Old Navy, right? Everybody, that is the trend right now. Right? You go into if you go on a plane, there's more people wearing sweatpants than anything else, or very casual stuff. So that's you could get that stuff at American Eagle, at the Gap, at some of the other cheaper retailers. So in any event, that's where I'm going to leave today's video. A couple other names that I'm watching for tomorrow, maybe TSEM, which is one of my favorite semis right now. You can look at this on the 1 hour value rate. Notice again, it hung in there very nicely at 120.14. So that's a name that I'm watching for tomorrow. Also, if you want a name that might look to rebound a little bit, right? Some of the underperformers tend to rebound like at the very end of the year, beginning of next year. One of the worst performers in the S&P this year is the Trade Desk. I would keep an eye on this name for a bounce, right? Some of the worst performers outperform in the very beginning of the year. So I would take a look at this name. All right, guys, I'll leave it there, guys. Again, sorry for the lack of enthusiasm, but just kind of reading what's going on in the tape, uh, what the tape is telling me right now, and also trying to think a little bit about what we're seeing in terms of uh, positioning Fed fund futures and